Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we started the real September after Labor Day with a big gap up. Probably a gap up that was pretty surprising. You know, you could have flipped a coin on Friday and figured out which way we would have gapped. It could have been down 35 handles or basically, you know, what it did today. So if you didn't have any risk on, don't beat yourself up because there's really not that many clues that should have said you could have risk on. And if you went out short, you know what, you had a thesis and things looked a little bit like a short, and hopefully, you know, you gave things 30 to 60 minutes and you worked your way out of it. Plus, if you went home short the right things, you actually probably added to it and made some decent money. So the question is, you know, what now? You know, where are we within the trends? Where are we today? So let's just get right into the charts. So overall, you know, I have the weekly chart up, and the trend that we've been talking about pretty much since 2011 was broken right around here. Okay, we were maneuvering this upper channel that we were in bed with pretty much for the majority of 2015 before it broke and broke fast. So it broke fast. You could have made money short. You could have pressed shorts. You could have got out of your risk. Everyone had the same ample time. And since then, pretty much all we've been doing now is trying to figure out what holds and how do you digest. So you look closer here. Doesn't look like much. You know, today is the best day since since whatever they're calling it, or the second best day of the year. But meanwhile, we're still well below the active trend, well below the channel. And you know, today wasn't the easiest day. So you go back to your daily. You go to the daily chart, and you will see. I've been talking about this wedge. First of all, this is when you had a wedge within that channel. So remember that wedge within the channel that I said, well, you know, you could actually go to my Twitter feed and the title was a wedge within the channel. And what way did the wedge resolve? To the downside. So now you're basically getting a wedge within the lower range. And question is, you know, will it resolve to the upside? You know, you had a strong day today, and you know, you have a few points of reference in the mix. So you know, can it get up and retest this 1990-ish area? Can it also maybe at some point before even September 17th test 2020 or the breakdown point? Perhaps. So what did it do today? All it did is take out Friday's high and close at the top end of the range. Last time it did that on the downside, you know, right here, you had pretty much a reversal of that. So, you know, this doesn't mean the bulls are out of the woods. It means that today they came in, China didn't fall apart, Europe was strong, closed pretty well. A lot of people weren't positioned for it. Some were probably short that had a cover, and some, you know, tried to play this bounce. So with that being said, if you came in flat like I did, how could you have handled it? You look at the 5-minute chart. Let's go to the spiders, because that's what I was focused on. In the beginning of the day, I was focused on basically the spiders, Apple, and Facebook. This was your first quick move. We put a pivot in, came in, and then roughly around 11:30, right when I was leaving pretty much for the gym, I'm like, okay, I'm going to go long versus the gap, because a big majority of the gap held. So it was long, I think, like 195.70s, and I put a stop in when leaving for the gym around 195.10, and it never got hit. You know, and then it came back, revisited, held higher, and then trended the rest of the day above the 8 and above the 21 days. So if you waited, if you bought here, you might have got stopped out because you chased it. You know, if you bought here, you know, when it came back in, it didn't go below it, so you might have stayed involved. And you know, that was pretty much the calculated surgical trade you had for $1.50 if you happen to have, you know, come in flat. So that's why traders hate big gap ups, because there's not a lot of meat on the bone. If we would have opened up a little bit, you know, then and when went up 400 points, traders would have done much better. If we opened up down and went, you know, that's another case scenario. So as of right now, we'll see how we open tomorrow on the daily chart. Let's hope they at least give a day and a half type of trade here. You know, last week they gave us a lot of day and a half trades. If you remember, you know, we closed strong on Wednesday, opened up on Thursday, closed weak on Thursday, opened down on Friday, open up strong, finish strong. You would think that maybe, you know, we at least get a retest of this spot right here with, this is your point of reference along the way, 198.05. And now we'll see also, you know, you've seen every gap get filled within this lower range. So we'll see for the first time, does this digest, hold the gap, keep some shorts trapped, and make people chase, and your next spot's right there, and then obviously you know, a little bit higher up. So we'll cross each bridge when we get there. It'd be nice to get a little upside follow through. So with that being said, let's take a look at some sectors. The Qs showed a little relative strength today. Remember that I just showed you what, 198 on the spiders? Well, the Qs already took out that prior high, which was the same as the 198. This was 105. No, this one right here. This was 105.02. This closed above 105.02. So real quickly, just to show you, the spiders on that day was right here. That was 198.05. Did not close above it. So that's still showing you that the Qs or technology is leading the way a little bit. So it's good to know, and it's a little bit healthy. It's okay. So we'll see now if what happens here at the 200-day, if it gets rejected there or reclaims it. It was pretty tight. IBB on Fridays gave a little relative strength, and today it also cleared its descending channel here. So maybe, and it also came to the 21 days. So this too is trying to reemerge as a go-to spot. Gave you a decent gap up. We've been navigating this thing. A lot of guys played it both ways when it broke this trend here. That was your get out of Dodge quickly, or if you were looking to get short, here was your head and shoulders top, with this being your neckline. And so if you were playing for your downside move, we talked about this 40-point move. Well, it gave it to you obviously on that crazy Monday, and now it held higher. It's now above this little descending channel, so perhaps there's a little bit more leeway back towards 357. But overall, on Friday, this thing was the first one to go green. We were trading in short hills, and while the spiders couldn't do anything, the bios were green. So look at this nice little green candle here on the IBB. So at least if you took home anything long over the weekend, maybe you said, okay, you got a doji on the spiders, you have a green candle on the bios, maybe more bang to the buck in the bios. And the bios obviously cleared this level and did a little bit better. As far as the banks, XLF, hasn't really done much, getting real tight in here. Okay, so with that being said, look at the TLTs. The TLTs broke down below this little area. So the TLTs are kind of telling you that September might be a liftoff. Remember this outside day here? If you would have sold your TLTs after a really nice move into an outside day, which is a technical sell signal. I don't care what everyone says out there. You can maneuver these type of things. Okay, here is a nasty candle. That was your sell signal. And then you had a gap down, and then it never even reclaimed this, and now you're right at the lows here. So, with that being said, without opinions, you're back below the 200-day. So here was your lower range, okay, where you cleared it, held, and rallied into an outside day. That was the same time the market probably hit its low, and now you're right back down here. So you can trade the risk ranges in the TLTs. So moving forward, stocks. Amazon, which we talked about at the morning call, that I am not long because I just didn't have the risk tolerance, did act best, closed near highs, could be one of the first stocks to kind of take out this little descending channel here. Okay, and here's your other spots. So it closed well. If you're looking for longs and you have the risk tolerance, Amazon in the game for that. Google also, as hard as it is to trade, it's still tight. It's in there. It's not near the 21-day, but you could draw yourself a little wedge right here. So, there are probably some traders who are thinking if we get long, continuation to the long side, this one is in the game. Tesla also looks really good as far as if we have any kind of continuation. Look at this. This is a nice descending channel here where if something were to clear that, this is in the game. It held higher. It's above all the moving averages, reclaimed a lot of spots. So this to me is, still has its go-to status if the market wants it. And then actually, as I'm looking at it like this, you could even say this is a little bit of an inverse head and shoulders pattern, where that's the left shoulder, here's the head, here's your right shoulder, there's your neckline. Sometimes it takes longer to develop, but above this, if you were short Tesla, you're probably covering. So, at this point, if I had to do something overnight, it would be a long versus short. Apple has its event tomorrow, so it's tricky. They do try and sell events. We'll see if we get a decent trade here. This too has a nice descending channel here, where you have resistance around this 112 and change. Very, very tight. I'd love to see this break above this and get back to the 200-day and give us some type of trade. I'm not long this overnight. I did make my initial money today with this because it had a quick move and showed relative strength before, going back and forth for the rest of the day. But anyway, that looks tight. Tight, tight, tight. We like tight charts. Tight charts can give active traders some cash flow. Here's when it broke down from the range, and now it's somewhat tight into the event. If they can't sell the event, which they always try and do, chances are maybe that'll give us some conviction that you could play this for a move up, and that would also probably take the indices higher. Facebook started off strong and then just kind of petered out. It too, seems as if it could be in the cards to break. Just kind of did a little bit here, but yeah, it's in the game. If we need some leaders and the market's going to not just give you a misdirection move tomorrow, the day after, some of these things need a day. But obviously, you see this is a doji. Did not close on the highs like some other stocks out there. Where did it close? Closed at 189.52. Okay, I did take some of this just because I feel like there's liquidity. I'm used to the actual levels of it, and it's something that is in the game. And if we're down a lot tomorrow, I could trade around it versus one of the other ones that might be down 6, 7, 8 handles or so. Banks, Bank of America was really strong today, kind of sniffing out a rate hike. It did clear this little spot, so maybe this has a little bit more room. Goldman Sachs. All these things look, they all don't look, they all look somewhat similar. A lot of them all have these lower ranges and they're trying to clear it to the upside. Lots of resistance overhead. Is it worth trading it to the upside? Maybe. If you have to trade every day, it's kind of worth doing something. You had a bit of a gap up today, and now maybe it continues above this. I pretty much, towards the end of the day, picked Citigroup. Not that it looks much better than anything else, but just one that I went with, and it is pretty tight here also. It's got a lower wedge type pattern, and if I wanted to bounce more, there is some room to retest this broken spot. So I just wanted to have a little bit of diverse risk on. So if you look at my VTF, and I sold most of my spiders, that's where I made my money today. I have a little Citigroup on, a little Facebook on. I have one other thing. Oh, a little FEYE. FEYE, I haven't been in this stock in a long time. But just like everything else, it's definitely broken. It definitely needs time. Here was your breakout failure. Here's when it broke this trend right around here. And now it's got an inside range. Poked its head, closed above a prior high the first time. There was some news about this big hack job happening, so maybe it gets a little bit of a bounce for a day two, and then you get to sell some into bigger resistance. But overall, still in a downtrend, not looking great, but there's a little bit of room if it wants to play catch up. And I remember trading this in this area and got out of it, I think, somewhere around here. So for me, I'm just trying it down there, and it could be decent back to the 200-day test. So you don't need massive moves to make active money and hopefully have it add up and give you a monthly P&L to pay your bills. But you want to map out where there is room and what could potentially be happening, and how would you feel if you're on the opposite side of the trade. If you came in short today thinking that we were going to test the lows of last week, because that's what everyone on TV said and it was a possibility, how would you feel today? You had to figure out, did you salvage a trade off the bat, or did you add more and then now go home twice as short as you were on Friday? And then you have to figure out what kind of gap up or down we get tomorrow, and are you playing that game? Or did you come in flat and want to be long and say, okay, now I got to figure out how I can get into a few things just in case we have a few days in a row, and then figure out what's next. Some guys that did go out short Netflix, maybe you had even a better trade today. This stock has been weak. Ever since this small little head and shoulders pattern came, as soon as it couldn't rally like some of the others. So this opened up and failed. And in my note, I'm like, if you could sell anything or fade the open for a green to red, it could be Netflix. And I think a lot of guys on the VTF got paid with that. So if that's you, congratulations. Definitely not the same Netflix as we knew when it was trending a few months ago and was above the 8 and 21 day. It lost the 8 and 21 day here and then finally stayed below it there. So that means it's a weaker versus stronger stock for now. They're saying Apple's going to start eating its lunch, so maybe tomorrow if they don't announce something with streaming, it can get a bounce and we'll be focusing on it for that type of day trade. We'll see. BABA, just, everyone's like, Redler, why don't you talk about BABA anymore? Because BABA's S-U-C-K, it's bad. I can't say a bad word. You look at the chart of BABA, and it was great when it first started, right? When it cleared this 92, gave you your outside day right there. That was your sell signal, and we talked about it. Then you were in a descending channel that never broke to the upside, gapped down, never filled it. And then finally, I remember here, it looked as if it could do, change, had a gap up, went that way, and then I remember right in here was when, I think on this day right there was my last day that I traded BABA. That was right there because you had here when you had your gap up on whatever those earnings were, looked good. This was your breakout move. Shouldn't have came back in, couldn't rally. Your outside day is right there, and then I'm like, I am done with BABA and haven't really done anything with it since, and it's, you know, still looks horrendous, to be honest. You know, reversed today from up 2 to down, whatever. Here's that other low. So, that, you know, that's my thoughts on BABA. Oil, let's take a quick look. XLE, getting really tight. You know, the market wants to, you know, go a little bit further up. You know, here you have the XLEs, very, very tight. Nice little symmetrical triangle there. You know, it protected the gap like we've been talking about, kind of protect the gap and show some commitment. Big move off lows, sideways action. You know, maybe you get a little bit more continuation. It's tight, so we'll watch that for the next day or so to see if it can continue. Oil, also pretty tight. You know, you had your engulfing move right here, which was your day one. If you buy day one, you could sell day two, day three, and now it's going sideways again, trying to show some commitment to it. So you'll see what happens here. Can the USOs hold just a 1380 or 14-ish if it can and continue? You'll see some maybe, you know, some of the stocks in the OAH XLE go, and that'll help the broader indice, and that might get, you know, the spiders to continue up towards bigger areas just for a trade, whether it's here or whether it's, you know, back to the lower end of where it broke down from. All I know is when it gets tight, you got to notice, and this is when it got tight here, when all the moving averages converged. You could have been neutral right there, and on this day, got out of your longs, and on this day maybe cheated short, and when it closed finally below the 200-day with authority and engulfed the range, there was your short setup until pow. But at least if you didn't want the short setup, at least you were out of your longs as an active intermediate trader because you were then below every moving average, which is not an environment to be long. And then you might have even been able to take advantage of that volatility on that Monday because that was phenomenal. And now here we are again. And we'll figure this out. We'll see what kind of open we have tomorrow. We'll see if we open down a little bit. Could it be bought for continued strength in some of the names that closed on the highs? If we open up, can you sell some and then figure out how it handles this end of the range? So that's the plan. You know, there wasn't a heck of a lot of volume today. So, you know, there is a lot of doses of skepticism to today. You did see, you know, China rally, so we'll see if there's any follow through to that. That might be, you know, something for tomorrow. Same thing with Europe. And overall, still active. Intermediate trends broken. Macro trends still intact. Actively, you have this wedge. You have, you know, lower highs, higher lows. Can we resolve and see a little bit of higher prices? You know, and still just continue to see what's strong, what's weak, and move those feet around in order to make a living. Have a good night. See you tomorrow.